China is a volatile market. The Shanghai Composite had its largest one-day point decline in 3 months. But the market overall is up 78% this year. That Shanghai Composite lives in a world of its own. But two guys named William ready to brave that volatility for the investment opportunity of a lifetime. Joining us now to give the inside scoop on China's distressed real estate, William Yip, who is with CDL China Real Estate Opportunity Fund. He's their managing director. William Nobrega, the Conrad Group managing director. They are advising Mr. Yip. Mr. Yip, thank you very much for being with us.
Thank you.
I heard just this morning, in fact, that real estate transaction volume in China has rebounded dramatically.
Yes. Now, since the beginning of this year, the sales volume rebound as much as 207, if not more. But the price has been gone up yet.
All right, so the rebound is coming much the way it's coming here in the U.S. Is there a lot of foreclosure activity? Is that what's prompting it?
They have quite a bit of foreclosure. They have quite a bit of a distressed property in China since the end of last year.
Mr. Nobrega, you think Chinese real estate is a good investment?
We love China real estate. We think it's one of the best asset classes. The fundamentals are just, in line. You've got a growing middle class. You've got a shortage of supply. You've got a GDP trajectory that's far superior than the U.S. And this demand for housing is not going to stop anytime soon. The key is to get into the right part of real estate. We see that as residential, and we see it as the mid-tier, not the high-end, because the reality is that the majority of Chinese can't afford the real high-end stuff. So you've got to focus on the mid.
Mr. Yip, is that yours or mine?
That's not mine.
The funny thing is, I was looking for my phone earlier, couldn't find it. Now I hear it ringing. Mr. Yip, so mid-level real estate, are you actually going to buy real estate, or are you going to buy the mortgages? I mean, how do you plan to make this investment?
No, we are going to buy the real estate. The real estate is called affordable real estate in China for general public. Because the high-end, not many Chinese today can afford to buy. But the high-end property is very expensive in China, as much as Hong Kong, almost. But the affordable homes in China, that plenty of people are going to buy, which is talking about a few hundred US dollars per square meters.
Now, are you going to focus on any particular area geographically? Are you going to be focusing on urban or non-urban? I mean, how's that?
We are focused on the first and the second tier cities in the southern part of China, mainly in the Guangzhou area and the Pearl River Delta area. As far as Shanghai, we also focus as well. This is another area that we focus too.
What kind of return are you expecting?
We're targeting 22% IRR per annum. It could be higher, but that's if the stars are aligned.
22%, and it could be higher.
Could be higher. Could be higher. It depends on the amount of leverage that they take. Right now, the reality is that the debt is very cheap in China. And for the right fund, it's readily accessible. The key is to have the right balance between debt and equity, obviously.
Isn't that a result of the government stimulus program? And can't they take away the punch bowl at any time?
They certainly can, but there's no reason for them to do it in the near term, next 18 months or so, until I think that the government sees a very strong global economy. So the window of opportunity for the distress play is within the next 18 months.
All right, gentlemen, you want to make a point?
I want to make a point. Timing is the most important element in the real estate development in China today. It is a good time in 2009, and maybe another good time in 2010.
All right. Thank you very much, William and William.